Hello traders, and welcome to my Advanced Scalping Course. In this video, we'll explore different methods to pass evaluation accounts and build our funded account army. The first setup we'll look at is the red folder news setup, this time at pre-market or the London session. We'll calculate how many ticks we need to pass this account, and this is a one-day pass account. The key difference this time, we're going long on one account while going short on another. The goal is to accept that the best possible outcome is passing just one account. We enter the position as close to the news event as possible. It's really useful to have two separate trading windows to place orders quickly. That's it. You can use this method during regular market hours too, but you need good volatility and clean moves. Accounts with fewer contracts can easily get chopped out. During market hours, you can protect one side by trailing your profit if the other side gets taken out. This setup is simple and straightforward. First account, passed. Next, we have the Washout Long setup. As the name suggests, we're looking for a small bounce for our long scalp. The ideal entry would be at a strong daily level that I've drawn. But let's break down why we're entering long here. Price attempted to reach our daily level but bounced. We have a small support level here. Price dipped below, but then bounced back above support and broke our 5-minute trend line. So now we have three signals. The ideal entry would be closer to the support area, but since it already started bouncing, I made a plan. Take a starter position with room to add at the daily level. If it starts working, I'll hammer in the rest of the contracts and step away from the computer. We have fresh volatility, I've picked my side, and it's holding the lows. Even after a slight rejection, I hammer in all my contracts. I protect the move up, but if you're new to this, be cautious. It can just chop you out. Okay, and it worked well. Second account, passed. Now let's move to more advanced styles where we don't try to pass the account in one go, but take multiple entries. One method I don't personally use, but know traders who do, involves lowering the profit goal by utilizing another account's drawdown. Let's break it down. If your profit target is $3,000 and you have a $2,000 end-of-day drawdown, you can trade that $2,000 away from your profit target by sacrificing a second account. So, let's calculate how many ticks that is. In this case, it's 57 ticks. You go long on one account and short on another, both with a 57-tick profit goal. When one side hits the profit target, the other account is blown. Now you trade the remaining $1,000 with a different setup to reach your $3,000 profit goal. But this has nothing to do with trading, it's pure mathematics. I don't advise using it, but it's the purpose of the video. Here's everything I know. Next, we have the OCO Order Setup, which involves scaling out at a profit target by placing an OCO order around the opening range. I call this the Alpine trade. I think he uses it a lot. I don't use this much, but I've tested it and apply it during news events. I place an order with 7 contracts at 31 ticks right at the open. You can use a smaller size if you don't want to risk blowing your account. The key here is to find 3 to 5 solid trades to pass the account. Now, here's the most important takeaway from this video. If you don't remember anything else, remember this. The key is to push hard at the start of a new evaluation account and then shift to a more conservative approach. I usually push aggressively until I hit $2,000, then trade conservatively for the rest of the evaluation. All right, let's see if we can jumpstart this evaluation account. That went well. We got $1,000 from the first trade. Now let's try to scalp the remaining $2,000. What I'm looking for next is a gap-up short, also known as a parabolic short. This is a setup that many small-cap short sellers use. Here's what to look for in this short setup. You want to see a fast rip to the upside, a parabolic move. These setups work best at the open, but can also happen later in the session. You should identify a resistance level beforehand. In this case, I don't have any key daily levels, but I see 22,000 as a level of interest. Why? It's simple. It's a round number, and humans naturally react to round numbers like 50, 100, or in this case, 1,000. So, I expect some kind of reaction at that level. I'm just looking for a pullback here, not a home run. I have 61 tick orders set, so about 15 points. I'll watch how price reacts as it approaches 22,000. Now, I'm prepared for a slight push above that level, but I want to see a pullback before it continues higher. This is counter-trend trading, and we're in a bullish open. But since this is just an evaluation, I'm willing to take the trade. I'll place my orders and use the $1,000 buffer we already made. I see a small rejection, so I'll recycle my contracts if my profit targets hit near 22,000. Here's how that works. I place orders in advance, spaced about 10 points apart. Each time a profit target is hit, I replace that contract at the last rejection point and set another target 10 points higher. Another way to trade this, scale in with 2 minis towards 22,000 and cover on the pullback. But for this video, I'll use some advanced trading methods. This style takes a lot of practice, so it's best to start with micros. The idea here is simple. Keep the cash machine rolling by locking in profits and using them as a buffer. Alright, looks like it exhausted itself. That psychological level worked. Now I'm protecting myself and hoping for a big wash to pass this account. Okay, that didn't happen. I'm still bullish on the morning and looking for an entry from the London highs to retest the previous highs. This setup is called a pullback long. It's the exact opposite of a bounce short. Since we're bullish, I'm looking for continuation. We're also getting closer to our profit goal, so I'm lowering my target slightly. Now, even though these are all playback trades just to make this video easier to follow, I didn't know how they would turn out. Here's what happened. I thought we were almost at the London high, so I hammered all my contracts too early and almost got stopped out. Everything had gone so smoothly that I thought this would be an easy trade to pass the account. Let's break this down properly. How should we have traded this? First order at the London high. Second order possibly at the lows, with a stop under VWAP. Once it starts working, add more contracts. Honestly, the best approach here, since we were missing about $600, would have been to trade conservatively and keep stops tight. Even knowing this, you can still get caught in the moment and make a bad decision. Now, when we're extremely bullish, longs often won't let shorts out, meaning we might not get those big pullbacks to enter. In those cases, we just have to accept that we missed the trade. But my bet here was that this was a micro pullback, so let's see if I got lucky, or if we get washed. I like this wick. It shows strength, so I'm staying in the trade and not cutting it. I also noticed that I sized in too heavily on the same move. If it pulls back, I'll recycle my contracts, because if you hammer in too much at the same level, you're just asking to blow your account. So don't do what I did. Never add contracts at the same level, that's just bad trading. Instead, keep calm and scale in or out if you're recycling contracts. Stop out if you're wrong and re-enter if needed. And there we go, we passed the account. This was another example of the recycle style, but the other way to trade it is just taking a couple of minis from those solid levels. When trading the last third of your goal, take less risk. You've already done most of the work. Here's something really important. If you've been pushing hard for an hour to reach $2,000 in an evaluation and feel exhausted, stop. Trade the last $1,000 the next day. Better yet, switch to the next evaluation and push that one towards $2,000 first. Then, when you come back fresh the next day with zero mental fatigue, trade those accounts to the profit goal. Split the workload over a couple of days. It'll make a huge difference. But that's it for this one. Thanks for watching. Subscribe to the channel, hit the thumbs up, and I'll see you in the next one.